Welcome back to Small Caps, ladies and gentlemen, and Happy New Year if I haven't said it to you already. Really excited to bring back my guest today. His name is Gareth Soloway. He is the President, CFO, and Chief Market Strategist for, let me get it right, inthemoneystocks.com. Inthemoneystocks.com. Gareth, we spoke just before Christmas, so now I can say it to you. Happy New Year, I hope.
Yes, Happy New Year to you too, Carrie. Thank you for having me back.
Oh, listen, I tell you what, we got a great response to the last one. So I want to touch on a few things we spoke about before. And it's really interesting, isn't it, that we're speaking today when overnight, yay, that gold price looks like maybe because last time when we spoke, you said, and I quote, gold will outperform crypto this year. And you wouldn't be surprised if it got to 3,000. Now, when we were speaking, gold was about 1792, I think it was at that time. And as I speak to you today, it's broken above 1800s, looking a little bit stronger. For my beautiful gold community out there, what's going on, Gareth?
Yeah, so I loved seeing the price action in gold in the last 24 hours. Beautiful move to the upside. One of the things that I've been so happy about and bullish on gold for is that we've seen the 10-year yield here in the United States kind of go up. And historically, for the last 20 years, when that happens, gold has gone down. But that hasn't happened this time. And I think I talked about it with you last time, how when interest rates are going up because of inflation versus a strong economy, gold will actually perform very, very well. So I do believe we're on the verge of a breakout. Let me show my chart here so we can kind of gather where it's kind of focusing in on. So you can see right here, we have the chart of gold, the wedge pattern that we talked about last time. It's still stuck in there, but it is getting towards that high end right here. I do think within the next few weeks, we break out above that, and then you should see a very nice move up back towards those 2020 highs back here. So again, I'm equally as bullish. Nothing has changed since I think it was about a month ago we discussed things. I'm still thinking gold is going to outperform the stock market as well as cryptocurrency this year in 2022. And so far it's doing exactly what I was thinking it would do.
What is causing it to do this, Gareth? Because there's a lot of people out there that, quite frankly, go, it's a bit of metal that you got to pay money for to store it. So why would I want to do that? What is causing it in 2022 to suddenly wake up a little bit more?
So I think it's a couple things. Number one, you have to look at the performance of cryptocurrency. So you could argue that in 2021, Bitcoin and how crazy the moves were, it drew a lot of money away from gold. But I think there's a lot of investors out there. I mean, maybe younger investors can deal with the volatility in cryptocurrency, but a lot of older investors, middle-aged investors look at that and say, I don't want to be in an asset. If I'm buying an asset to protect against inflation, I don't want to think about it dropping 30 or 40 or 50% on me in a matter of months. And gold generally is not going to do that. So it's drawing money back. I think there's money coming from Bitcoin and going into gold. And not only that, you still have a Federal Reserve who no one believes they're going to actually really raise interest rates as much as they say, right?
Now, what are they saying? Sorry, Gareth. Sorry to interrupt you. What are they saying? They're saying 2 to 3
rate hikes.
Rate hikes this year. What do you think?
Yeah, so the markets are even pricing in 4 rate hikes this year, which is remarkable. I think they do 1 or 2 at most. And then, so this is the weird way that the Fed here in the US has to deal with things. They have a dual mandate. So they have to monitor inflation, but they also have to monitor unemployment, right? So if they raise rates and they're tapering right now, so they're already cutting back, which is essentially tightening, then they're going to go into the next phase, which will raise rates. At some point, you're going to see the stock market come down even more. The NASDAQ just went into kind of correction mode as of today, which is a drop of 10% or more. If you start getting down 20% or more on the markets, you're going to see unemployment start to go up, because you've had this wealth effect, which has made people spend so much money buying goods, which creates that demand for a supply. If you start taking that wealth effect away, then businesses don't have to produce as much. They're going to start laying people off. And that's where you start to see unemployment go up. And as soon as that happens, the Fed is going to have to deal with that side of their mandate and start to make policy loose again. So it's this kind of roundabout wheel that just keeps turning. And to me, it's inevitable that the Fed will never fully be able to get rid of their balance sheet is insanely high. They're talking about drawing that down, raising interest rates. I mean, maybe a few rate hikes, and then I think they'll probably stop.
I think it'll go, they'll put their head above the parapet with a little rate rise and then go, oh, that's too scary. Back we go.
Yep. And there's going to be, I mean, think about all the political pressure too. I mean, the Federal Reserve here in the United States is supposed to be outside of that. It's not part of the government. It's supposed to be an independent bank. But I mean, when you have the president appointing the Federal Reserve chair, it's always going to be political. There's always pressure. We saw Trump even making very direct comments about Powell when he was president. Now Biden has reappointed him. So, I mean, there's always a political side to it. And no Fed chair wants to be the one that has to deal with a stock market that's in crash mode.
Do you think the stock market is setting itself up for crash mode right now? Because it's a lot of people out there. And two questions here, Gareth. Mm-hmm. Do you think the stock market's setting itself up for a potential crash now? If it is setting itself up for that, is it only in certain sectors like the tech stocks versus, for example, gold mining, silver mining, maybe the lithium, the resources sector, which is in great demand at the moment? Do you think it's certain sectors will still be okay?
Yeah, I mean, I think the miners will perform the best of most of the sectors, along with gold and other metals and stuff like lithium, right? Maybe even uranium and miners like that. But overall, I think that nothing is going to be fully immune. When you get fear and panic in markets, and we saw this in 2008 and 2009, it doesn't necessarily matter. You'll have ones that are down less. And I mean, we already have tech stocks here that are down. Some of them are down 50, 60%, like Peloton. I mean, Peloton's down something like 70 or 80% from its highs of just 2021, which is remarkable, the drops already. In fact, I'm kind of nibbling a little at some of these beaten down ones just for a technical bounce. But let me show you this chart on the S&P, and this is what has me concerned for the markets in all of 2022. And this is something that I thought was going to happen, and it looks like it started to happen. So here's the S&P 500, right? So you have this beautiful channel going back to May of 2020. So it's over, it's basically almost a year long where the markets were in this beautiful uptrend, right? I mean, you could just see how these parallel lines kept the market in check. Well, look at what's happened just in the last day or two. We've actually broken to the downside. So this is what's concerning, is when you break this trend, it's exactly that. It tells you that the uptrend in the markets has now broken. It doesn't mean we won't get bounces, but what it tells me is that you're going to start to head lower and lower, and you'll get bounces, but you're going to continue to head lower overall. And again, that's something that, again, the charts are telling you that has to happen. Oh, the other thing, let me show you one more thing on this. It's just,
I love your charts. They're great. So bring it on, Gareth.
Yeah. So if we zoom out on this chart, right, we're going to go all the way back to, let's go back to 2013 over here. Now, check this out. This was the trend of the market, the stock market, from 2013 up until 2020, just before COVID. So look, it was an inclining move, beautiful inclining move, but overall it wasn't ridiculous. It was just a grind higher. Then you got COVID, and then the market got a steroid boost, right? The Fed comes out with trillions of dollars, and then look at the trajectory of the market after that. So if you think about it logically, let's say the Fed does take away their stimulus. Well, where should the markets go back to? It makes total sense. We would go back to the longer term trend, which would be right here on the S&P. And that's really, I mean, in all fairness, that's another drop of about $80 from here on the SPY, about 800 points on the S&P. So you're talking about close to 20% drop, when all is said and done. But again, it's just remarkable to look at the longer term charts and then see the trajectory of when the Fed came in with their bazookas of money, what the market did. It just went like vertical.
Yeah. Well, that's because they flooded the market with all this liquidity, and people were just going, and we see it. We saw it in a number of the Reddit users just going, hey, buy this, and also social media, throw your money. And not based on fundamentals, based on pretty much nothing, to be honest.
Yeah. Yep. You're right.
And what I'd like to know is, what do you see are the biggest dangers in the market? Is it inflation? Is it the Fed raising rates, or is it a black swan event?
So what my biggest concern in 2022 into 2023 is that you have a Federal Reserve that is boxed in, right? So they understand inflation is now 7 to 8% here in the US, and they need to get it under control. Now, by doing so, they're going to raise rates, they're going to taper, obviously, and maybe reduce their balance sheet. The problem is that with inflation this high, if the economy slows, which is when you raise interest rates, that's what's supposed to happen, right? It kind of slows growth down, which gets inflation under control. But the problem is if you still have inflation at 5%, so let's say it comes down from 7 to 5 or 4, and the Fed has to start easing again, does then inflation go from 4% to 12%?
Oh, wow.
And then what do you do? I mean, where do they get out of this mess that they've built for themselves with, if they can't just print more money, what are they going to do? Right. And that's my biggest concern, is that you have something what's called stagflation, right? Stagflation is inflation with low growth or negative growth out there. And that's kind of the boogeyman that everyone is scared about, but no one's really talking about it right now.
Why are they not talking about it? Are they too scared to but seriously, Gareth, it's almost like everyone's going like this: speak no evil, see no evil, hear no evil, just keep going up until it doesn't.
Yeah, I mean, I think for the most part, right? I think for the most part, the commentators and the analysts, they focus on, the next 6 months. What's the Fed doing? This is the economy. They usually wait till it's a little closer or where it starts to show itself. But, in general, they want TV ratings, and in bear markets, you get less TV ratings generally because no one wants to look at the market. Everyone wants to be like this, right? When if I don't see my stock going down, I'm not losing money, right? So I think eventually they will talk about it, but probably closer to the event.
Do you see right now? You mentioned inflation is at 9%. Do you think that's the true inflation? Because, how do they measure inflation these days? They kind of put what they want in there. And I'm wondering whether inflation is actually a little bit higher than that, and they're just hiding it a bit. But is it right now out of control? And as a result of that, potentially that gold price that we see of a bit of a breakout now could get even stronger.
Yeah, I agree with you. I mean, even when inflation was supposedly below 2%, you still saw, the best thing to do is it's hard to do because it's on a day-to-day basis and you don't really recognize it. But if you ever go to the store, like, have you noticed how, 10 years ago we would buy a half gallon or a gallon of ice cream, and the containers are getting smaller and smaller, but the price is staying the same. The same thing for tuna cans, like buying a can of tuna, all these type of things, they keep the price the same. So the user or the buyer doesn't know, but the size shrinks. And it's just showing you there. They always say, oh, don't include food and energy. My issue with that is that the average person in the world, that's what they spend most of their money on. Absolutely. So how do you not pay more attention to food and energy? You should be, making that your priority. So
I 100% agree with you. And I've got to tell you this story, Gareth. My beautiful dad, who's not with us anymore, I hadn't bought a Monte Carlo biscuit. I call it the hidden inflation. I hadn't bought this packet of biscuits for maybe 4 or 5 years. I bought a packet, took it home. It was 1/3 smaller. So, the price had gone up. They're called Arnott's Monte Carlo biscuits, and they used to be a decent size. And then now they're like, oh, and you said it right on. It's the hidden inflation. They make these things small. The price doesn't change. So the average man in the street thinks it's all okay, but you're not getting as much bang for your buck. Really interesting. And they just don't put food and energy in. So, all right, we've talked about threats. We've talked about the potential of the stock market coming back down a little bit, that some sectors will be hit harder than others. Let's talk about opportunities. Let's not go too deep into the rabbit hole. Let's go into what does Gareth Soloway look for with the opportunities? Because out of every crisis, there's always an opportunity.
There sure is. Absolutely. And I do want people to understand that, wherever there's doom and gloom, there's always opportunities to make money, just like with gold miners performing so well. Silver's had an awesome move to the upside just in the last few days. That's getting close to a big breakout as well. And then I think the big thing is to start looking outside of US stocks. And again, I'm not super familiar with stocks in your region, but for me, I've been accumulating Chinese stocks. Chinese stocks already had their their collapse, right? We've seen Alibaba drop from $300 down to the low 100. So, you can find good value. Yes, there's risk, obviously, with Chinese stocks with regulation, but for me, it's calculated risk, right? You look at their valuations, you look at the potential for growth. The Chinese government's not constrained as much as the US and the Federal Reserve are. They can pretty much do whatever they want, print as much money as they want. They're already bringing the digital yuan out, which is going to eventually compete with the dollar to be the reserve currency of the world. So again,
hang on.
Okay.
Hang on. The digital yuan is already out. I want to unpack that a little bit because I've been talking about that in the past. That's out. That's being used.
So this is all right. This is what I've heard. It's secondhand, but I've heard that at the Olympics, they're going to be handing out cards with digital yuan on them for people to spend. That's what I've been hearing. Again, I haven't experienced it firsthand, but that is what I'm hearing in terms of the Olympics coming up. And I think it's just very, very soon.
February. So next month. So do you also just said that could compete with the US dollar. How's that going to compete with the US dollar?
Well, China always has this long-term view, right? Which is one of the main reasons why it frustrates me so much with the US. In the US, we have these elections every 4 years, which democracy is the best, right? I mean, there's no arguing that. But when you have politicians that say, okay, well, I need to be reelected in 4 years, so they only focus on the great stuff in the short term, they never have a long-term view. And that's problematic for an economy. When you're trying to build a long-term strong economy, you can't keep injecting it with fake stuff in the short term just to get reelected. So in China, you have a situation where the digital yuan, they want that to be the reserve currency. They've started that plan already. They to me, it's kind of a no-brainer that they're on that path. They want to become what the US is. They want to take that mantle from the US, and the digital yuan is going to be, in my opinion, a very likely candidate for the world reserve currency. Probably still 10 years away, maybe more, but I think it's going to come there.
You mentioned a moment ago, because we've spoken about gold, but you also just mentioned, and I don't want to let this one go, you mentioned silver's had a bit of a break up to the upside. I want to talk, because precious metals to me are gold, silver, platinum, palladium. Any comments on those three? Silver, platinum, palladium, but silver definitely has broken out.
Yeah, I mean, so silver, interestingly enough, is in a position, and let's bring up the chart again of silver, is where it's had a great move off recent lows. So if we look at the recent lows on silver, very defined support right here, right? It's been holding this $22 level very nicely. You have a short-term trend line right here that I've been monitoring, and look at where silver is as of today. So it's right up underneath that line. So the question is, can it break out through there? If it does break out, then likely you're going to go to this high end range around $30.
Wow.
But again, it technically it hasn't quite yet broken out. It wouldn't surprise me if it needs to kind of consolidate after this big move in the last week or two. And consolidation means sideways action to just kind of gather itself for the next big push. But inevitably, I do think it's going to break out as well, based on the way the chart looks right now.
Platinum and palladium, have you got any thoughts on those ones as well?
Let me take a look here. I haven't looked at platinum, but let's take a look right now and see what we have on that, because that's definitely a chart.
Now you know, ladies and gentlemen, that we don't prep these things beforehand. I just throw stuff at Gareth and see how we go.
And I love that. The unscripted stuff is always more fun. So just jumping on this chart, and again, to be clear, I haven't really looked at this chart much. I mostly focus on gold and silver, but it's always good to look. So one of the things I see, look at this beautiful trend line right here. It's connecting pivot points along the way. What that tells you is that's resistance. Looks like it's around 1030, 1035, if I'm just, guesstimating here. But if it can get through that, that is, again, a short-term breakout. And what you're seeing is all the metal charts that we've looked at, they're all approaching these big levels. Now, as of now, these are resistance levels. So until you break a resistance level, you can't assume it's going to break. But again, based on the inflation, based on all the stuff going on, I do believe it will break. And again, same thing with platinum. I think it probably heads back to the recent highs, well, the early 2021 highs.
It's so a lot of these metals potentially are starting to get a little bit of, I guess, strength underneath them. And it's really interesting when you bring charts in, because I'm not a chartist. That's why I love chatting to you, Gareth, because I'm like, I scratch my head and go, how do charts work? But they do give you a trend, and they do give you a better understanding of where things potentially can go. When we spoke last time, we spoke about oil and gas. Now, oil's just hit a little bit. I think it's $86 a barrel. Do you think, because we've spoken about the fact that everything's going into that sort of the lean green economy, but you can't do that all at once. There's still a need for oil and gas coming into the future. What's happening in that oil market?
Yeah, so really interesting price action and great time to talk today in terms of oil. So oil just breached this previous high from October, which was around 85 and a half. And it got I think it got as high as almost 88 today. But this is the key. So if you take a look at the candle that formed today, so see this candle right here, how you have this long tail on top and it closed in the lower areas. Yep. That tail is referred to as a topping tail. Topping tails in technical analysis are reversal bearish signals. So you actually got a bearish signal on oil today, a reversal sign. And to me, oil likely will trade down. In fact, in the overnight here, we're seeing it trade down as low as 85.20 or 85.19. So it's already starting to come in. Oil very short-term extended. And overall, I am short oil right now. And just to explain why, my thesis is that even though, so oil's been going up and it's a commodity, right? So in theory, with inflation, it should go up. But you also have to look at the side of demand. And if I'm correct, as the Fed tapers, right, and the stock market declines, and then if they start raising rates, if I'm right that the economy will slow, then the demand for oil should decrease and price should come in. In addition, the midterm elections in the United States are coming up in November, and almost always you'll see a drop in oil ahead of big elections. And they do that on purpose. I don't have any proof of any shadiness here, but it's just, if you look historically, this happens where price comes down on oil ahead of elections to kind of make people feel a little bit better about how much they're spending on filling their gas tanks.
All righty. Quick one on lithium, pivoting away from the oil and going into what I call probably one of the hottest commodities of the moment. And I guess this goes into the EV revolution, the electric vehicle revolution that we're seeing post Glasgow. A lot of countries around the world go, yeah, we're all going to have zero carbon, all this nonsense. I shouldn't say that nonsense, but you know what I mean. So moving from the ICE to the EV, internal combustion, lithium stocks, a lot of them have rallied hard, or were they rallying from a very, very soft base, and have they got a long way to go? So more to go or hit the top? What's your thought?
Let's take a look. And again, here's Core Lithium. It's an Australian stock, I believe.
It is.
And we can take a look at this chart and see what it's got to tell us. And you're right. I mean, what a remarkable move to the upside on this one in just, 50 cents to almost $1. In general, it's short-term extended. You can see the price action. You're starting to meet a lot of sellers. That's what that's telling you when you start to get these kind of sideways candles. I would not be a buyer here because it's too extended, but having said that, you can't deny the EV revolution and it's going to go global. I would look for a pullback to the previous pivot point right here, and then I would start to accumulate. So you're looking around 65 cents, give or take. Look for that pullback, and then I think you buy it. I think you play this revolution. I think that you see, we obviously here in the United States, I hear mostly about this, but we know China is major into electric vehicles. I think the rest of the world will follow. It's the new thing and it's not going away. So I think, again, just buy on pullbacks, buy technical support levels on pullbacks.
Yeah, and it's interesting that people, Toyota's come out, they're throwing billions at it. There's still a lot of liquidity out there. There's still, I think, a lot of money sitting on the sidelines waiting for opportunities. So let's go back to those opportunities and roll it into a nice little package there, Gareth. Instead of looking at the downside, tell our audience where you think, summarize for our audience where you think the opportunities are coming into 2022, because it's still January, so I can still say coming into.
Okay, so I'm assuming I'll be lucky enough to be back maybe in a month's time with you guys or so.
Absolutely. I love chatting to you. So that's a given.
Let's focus just between now and then, right? So I think there's a lot of opportunities. I would remain long gold, right? Gold, again, likely breakout on gold, maybe some silver and some miners. So definitely be long the miners. The GDX here has had a great move. I mean, just remarkable move. same bullish consolidation over the longer term, hasn't quite reached resistance. But then when looking at stocks, look at names like Alibaba, good quality China names that are big, producers of profits that have come down exponentially from, again, a 300 and change down to right now trading around $128. And then if you're playing for a shorter term trade, a name like Peloton, which was just a huge runner, that's a good one.
Just let me stop you for 1 second there. Peloton, massive pullback there. Is there a problem with the company, or is it just the masses started to move away when they saw a bit of a drop?
So what went on with Peloton is that you basically had the pandemic or, COVID making everyone stay home, and they sell exercise bikes and classes that you do from home. So as things have opened up, this has come back in substantially. But what I love about it at this $30, $32 level is that you're now at pre-pandemic levels, right? Yeah. So the idea here, and this is how you make sense of it, is saying, okay, if you're able to buy it before they got all the exposure of the pandemic and all of the people buying their bikes, and now you're at that pre-pandemic level. So again, you'd have to go and say, well, I don't think the company made any advances in the last year and a half since March 2020, or almost 2 years at this point. And I just don't think that's true. I think that the company has at least advanced slightly. My guess is it's an oversold chart. You probably have a bounce back to $45 to $50. And even at that point, it's still down so much from these highs that I think it's a no-brainer to, at least for a swing trade, for a few weeks to a month or so.
All right. Well, so overall, have a look at those that have been smashed heavily, but that have got good, strong fundamentals. Mm-hmm. Precious metals, you like the gold. And, as I said before, gold will outperform crypto. Actually, very quickly on crypto, Bitcoin. Ooh, now a lot of our audience are not big crypto followers and all that. I am a little bit. So forgive me, ladies and gentlemen out there. I just want a quick view, Gareth's view on Bitcoin. You've said in the past that it could fall to 20,000. What are your thoughts?
So I'm still in that camp where I think it's going down to 20,000 or lower. And again, you can already see kind of the writing on the wall here. And the reason I say that is because, Bitcoin's already 30 to 40% off of its all-time highs up here. Yeah. And if you look at the stock market here in the US, we're only down about 10%. So, in general, we see crypto correct exponentially 2-3 times more than the stock market. It's just the way it works because it's a more volatile, newer asset. So the idea is if the US stock markets continue to deleverage, you should see further downside. Now, just in terms of charting here, I got to throw in some charts for you guys. Take a look at this trend line. This is telling you why Bitcoin has held up right in this range, this long-term trend line. And you can see price right into that point. And then you also have this flat top trend line right at that point. So this is a major, major level. If you're a bull out there on Bitcoin, then you need to see Bitcoin hold 40,000. If that fails, you go almost immediately to 30,000 and then potentially lower after that. So this 40,000 level, that's why price has actually held up for a few weeks here. It needs to start to move higher. Otherwise, if it breaks, a lot of trouble for Bitcoin. And I still think overall, when all is said and done, Bitcoin will find itself down to 20 or just below 20.
It's interesting, though, Gareth, isn't it? It's almost like Bitcoin likes playing games, saying, you know what, if you've got weak hands and you can't stomach me turning around and dropping it right back down to 20, maybe 18, then you shouldn't be in this game. For those of you that are holding, yeah, it'll come, because that's what's happened in the past. Historically, if you look at Bitcoin, it really does take a big tumble, but it comes back.
Yeah. And just to point that out too, in 2017, when it hit around 20,000, it then fell to about 3,500. And I still remember vividly buying it down when it was, unfortunately, I didn't buy it down to 3,500, but I was in around 5,000 to 7,000 accumulating. And I still remember when I would tell people there was a point where they were like, oh, you're crazy, it's done. That's what you want to see. When something bottoms out, you want everyone else to hate it. And that's when you have to have the guts to step up and buy it. So long-term, I love Bitcoin. I will be a huge buyer when it does come down, but I need to see this deleveraging event, this .com kind of blow up going on in crypto first before I step in.
Gareth Soloway, always fantastic to see you. We will be back next month because what I want to know is we're going to have a look at those gold charts and those silver charts. We'll have a look at some of those other ones as well. But as always, thank you so much for joining me on Small Caps today and sharing your knowledge. And as I said right at the start, ladies and gentlemen, if you want to check out Gareth Soloway's work, go to inthemoneystocks.com and make sure that you follow him on Twitter and all those other wonderful channels. Gareth Soloway, for now, great to see you. As I said before, Happy New Year. See you next month.
Thank you so much. Have a great one.